So I think it's more of a knee-jerk reaction is what I would call it. If we give money to women, the repayment ratio will be higher. Not do such kind of practices. So you need to stop it.
Hello everyone, welcome to this special podcast of WTF where we talk all about finance. Today in this special podcast, we're going to talk about the future of P2P lending in India, and who better to talk about it than Bhavin Patel, CEO and co-founder LenDenClub. Welcome to the show, Bhavin.
Thanks, Rajat.
So, Bhavin, you started LenDenClub back in 2015, and since then it has been almost 9 years now. I'm sure you started LenDenClub with some vision and some thought, right? And you've seen a lot of changes over the past couple of years. So, is that vision still the same, or do you see any change? How do you see P2P lending industry today?
So vision is still same. In fact, I would say it has become more clearer and clearer. When we started in 2015, there was no regulation in the industry. Today we are operating in the regulated business, and I always appreciate that in financial services business, if it is regulated, it is always better for the customers, industry and all the industry players as well. So in 2017 when RBI came up with the regulation, it gave little bit more clarity, and then in 2024 once again RBI reassured that we are looking into the sector and we are bullish about peer-to-peer lending industry. So I think it has made it clearer. Now how to align company's vision with the regulator's vision is a challenge which we as a company has to solve. But as far as our vision is concerned, in 2015 also we were kind of sure that this could be a third biggest lending industry after bank and NBFC, and today also we feel so. With reaffirmation from the regulator, I believe in next 4 to 5 years we will see huge numbers coming from peer-to-peer lending industry on the lending side.
Right. So if you look at any industry, right, it has they grow in certain pace, certain way, and certain for certain reasons, right? Do you think this is the right time for P2P lending to see this kind of change?
Yeah, I think timing never matters. Yes, when it comes, we always feel that if this had come earlier, it is good, or if it had come later on, it is good, right? But I would say that in regulated market, regulator finds a right timing when it doesn't hamper the industry, at the same time when it is important for the customer. So yes, I personally feel that the regulatory changes could have come at least 1.5 years back. But nonetheless, now because the changes are already announced, and that gives a lot of clarity to peer-to-peer lending companies, regulator as well as the customers. So I think let's appreciate the change and realign all the stakeholders, customers, us as well as regulator with the change, and let's see what we can build in next 3 to 5 years time period.
Right. So now, because of these changes and whatever has come up in the past couple of months, there have been a lot of reports on the matter, right? A lot of social media buzz as well. Everywhere people are talking about these things. So, do you think these changes have that kind of impact the way these reports are talking about?
I do not think so. And at LenDenClub, what we had been following is, as and when there is a regulatory advice coming in, you understand the concern point and address it. Now if any player has not addressed it on that time, they will have to adjust their operations basis on the change announced by the regulator, and I think that happens across the industry, whether it is SEBI regulated entities or IRDA regulated entities or RBI regulated entities. Time to time they are being advised on various matters. If they align themselves, they will not face any challenge when such kind of announcement comes in. If it doesn't happen on the day of announcement, you suddenly find yourself out of the place, and you will feel that these changes are going to hamper your business in a very big way. So I would say that depends on company to company. If a few platforms did not take those actions at the right time, yes, absolutely, they will face some challenges, right? Stabilizing the current operations, modifying their system according to the regulatory master guidelines. But platform like us, who already incorporated those changes during last 1.5 year, probably we did not see that interruption. Again, whenever any cultural changes is expected, regulatory changes are expected, those bring such kind of resistance. So I feel that these are initial reactions by the market. A lot of time markets also give knee-jerk reaction to the governmental policy or the regulatory changes. So I think it's more of a knee-jerk reaction is what I would call it. But in next couple of months time period, you yourself will see that lot of platforms are coming up with the new product lines, innovated structures of lending, which are more aligned with the regulatory vision.
Right. No, you're absolutely right. I think we have seen these changes happening in the industry for the past couple of years, right? We've seen a lot of growth, a lot of change, and the industry has shaped to some extent, and I think these guidelines will definitely help. You mentioned one point that, the regulators have always been in consultation with the P2P platforms before they, came up with a final update on the regulation. So can you elaborate a bit on that, like how these consultations really happen? I think it happened during the first time when RBI started regulating the market as well. So a bit more on that, please.
So when the first set of regulations were announced in October 2017, I think at least for 1.5 year, RBI was very closely discussing various aspects of prospective regulations across the industry, various stakeholders, including customers, the platforms which were operating at that time, including us. I had personally met a few of the RBI officials at least 3-4 times. We presented various parts of the regulations in our way. They would have adopted few of those. They would have spoken to few other industry experts basis on our conversation. So it's always a consultative approach is what regulator looks at. The same thing happened in 2024 change as well. That I think over last 1.5 year, between June 2023 to August 2024, there were many instances where the regulator was meeting individual companies. They met with around 7-8 platforms. They spoke to customers. They understood various business models going on in the market, customer pain points, customer likings about the products, and post that they advise companies on various aspects that these are the good changes, you build more technology around these are good innovations. Another set of things where they guided that these are small corrective actions you need to take because it's not within the alignment of the existing regulations. And then there were certain kind of things where they advised that this needs a complete correction. So it is not aligned with the current set of regulations. So you cannot do such kind of practices. So you need to stop it. So all this happened over last 1.5 year, and post that the final regulatory changes were announced.
Perfect. So you mentioned that the first regulation kind of came in 2017, right? And now I think after a couple of years, RBI finally made some updates. Now, are these updates really that different from when it came initially? And what kind of changes are they? Are they really big in nature?
I would say they are not big in nature because majority of these are elaboration of the existing regulations. Right. Only couple of points are added. Those couple of points are no lender to lender transaction can be carried by the P2P platform, or in a way one lender's money cannot be utilized in giving to another lender. Except these 2 points, rest of the points were already there, part of 2017 regulation. Either they have done minor changes over there or made it more clearer, so that the creative misinterpretation can be prevented, because any misinterpretation or creative interpretation can ultimately result into customers' losses. And I think whatever changes are done in the 2017 master directions, those are in alignment with the best possible positive impact on the lender as the central party, and accordingly all these advices are announced.
Right. Now, you're absolutely right. I think the changes that came in were not really had too much difference from what was there already, correct? Now, these changes, of course, impact platform to platform, right? So, at an industry level, what kind of impact do you see these changes?
So, at an industry level, I think in a short run, it will be more of alignment challenge. That lot of players have to align their products with the regulatory changes, and within next 3-6 months I foresee a regrowth phase for the industry once these changes are already done and majority of the platforms are back to track on their growth journey.
So understood. Now these changes came in after a really long time from the first time RBI came up with the regulations. I'm sure in between there are a few minor things that kept coming in. But was this really necessary for the industry or for RBI to really make these updates at this point in time?
Absolutely, because regulator always thinks about the end customer, and here the end customer who is kept in mind is a lender. Now for lender there were certain practices available in the market which were good, but definitely there were certain practices which could have hampered interest of lender in a longer run. So I think now the industry had reached to certain size wherein regulator had to be concerned about the future operations of the industry. If something is good for future, they may accept that as a positive modification to the regulation. But if something is not so good or something which can lead to probable accidents in the industry, regulator will intervene and they will check that if I keep lender as a most affected party, how this is going to impact them, right? So I think there were definitely certain practices which could have affected lenders in a long run in a negative way. So that's the reason I think regulator was so active over last 1.5 year, understanding the customer psychology, the kind of products were offered, the way customers were perceiving this product and how this can be good or bad to the customer. And I would say that no timing could have been bad. So I think it's good for the industry if we are looking at next 5-10 years as a base building for peer-to-peer lending in industry in India. Probably it's a good positive change.
No, I think you're absolutely right. So because I believe that customers were of course benefited in some way on these practices, but it was good for the short term, but in long terms they could have affected them really. So one last question, Bhavin. How do you think technology will be able to help lenders benefit from P2P lending platforms?
So I think now with the new changes, platform will focus more to be exchange or a marketplace model. So that's one of the biggest clarity from this extended regulation or the elaboration of the existing regulations. As and when you try to remain exchange or a marketplace model, so let me just give you a simple example. If we talk about marketplace model, you can count anybody like Ola, Uber, Amazon, Flipkart and all, where there are two parties who come on the platform, do the transaction, and platform earns certain fees out of it. If we talk about exchange, we can consider NSE, BSE or any kind of similar platform. Now, if peer-to-peer lending companies are operating exactly like platform, they may come up with the innovative technological solution which can help lenders to take better decision, maybe better analytics, maybe technological features which can help them diversify money across more number of loans, or which can help them automate some portion of their work. So let's say if I have to choose 100 borrowers with certain profile in my mind, if technology allows me to do that, it's really good. So now peer-to-peer lending platforms will focus on such kind of technology features rather than focusing on how to deliver exactly same returns to the lenders, or how to increase their income or interest income, right? I think now the focus will shift towards remaining technological platform but providing better features to the customers.
Got it. Going out of script, I'll have to ask, why do you think, and I'm sure a lot of lenders will also have this question, why do you think P2P lending is necessary in any economy?
See, from both the parties' perspective, I think there are a set of borrowers who are looking for the loan, but they are not being fulfilled. So they go to any local money lender and unofficially they take money at 7, 10, 15 or even 100% per month, right? A lot of time even 10% per day kind of interest are paid. So I think as a economy, we need to bring these customers to the mainstream economy, making it little bit better for them and bringing them to mainstream lending system, so that in future if they require two-wheeler loans, car loans or home loans, they have certain history available with the bureaus also, and banks and bigger NBFCs can accommodate them. So I think that's where the importance of peer-to-peer lending platform comes on the borrower side. If we look at the lender side, lenders are looking at better interest income. They invest into various products like FD, debt mutual fund, equity mutual fund, equity market and all, where in a longer term they target 8%, 10%, 12% or 15% kind of returns. Now if by bringing capital to peer-to-peer lending platform, giving loans to the needy borrowers, if they are able to generate 10%, 12% kind of interest income, nothing bad into it, right? So here both the parties will be in a win-win situation. Borrower gets money, so that a set of society which as otherwise is not part of the mainstream lending system, they are coming to the mainstream lending system, and the other party who is having surplus capital available, they are getting reasonably good returns in terms of interest income here. So it's good for the society, and at the same time we are looking at achieving our financial inclusion target as an economy.
I'll have to ask this question as well. So now one myth that people have is that those who come to P2P lending platforms, borrowers especially, are those who are not getting loan from anywhere else, and that's why they come to P2P lending platforms. Is that true? Because I know for sure that there are certain reasons why they come to these kind of platforms, and the way these platforms really verify details of these borrowers. Can you elaborate? Maybe take a minute to elaborate on this.
Yeah, that's not correct fact. If we were talking in 2016, probably it was a fact, because we were not known, P2P lending industry was very new in the overall lending ecosystem, but that's not the fact today. If we look at LenDenClub's number in terms of disbursement versus the kind of NPS we have achieved, that will prove. Sometimes a lot of things are perceived. So for example, if we think like a lender as an individual, we always will think that if we give money to women, the repayment ratio will be higher. But again, that's a myth or a perception. That's not necessarily correct. We also think that if we give money to security staffers or somebody who is doing work in households, maid kind of people, they may default more. But probably these people are one of the most honest people to repay their EMIs, right? So unless and until you have numbers backed behind such logical conclusions, those are not right. Now on our platform, we have seen borrowers who are having more than 1 lakh rupees salary coming into their account on a monthly basis. They might be coming to us because of the speed of delivery, easy processes, completely digital platform, maybe the kind of support we provide, or they don't need to speak to anybody before getting the loans. So there are many various reasons available, and today the technology is available. I would say ingredients are available. A company or a platform has to make a good recipe out of it. So you can understand your customer completely digital, in a digital way. So it is completely wrong to say that people who are coming to P2P lending platform for a loan are not getting loans from anybody else. Data doesn't suggest that.
Perfect. Great. Thank you so much, Bhavin, for joining us today. It was really great catching up for everyone else. The reason we kept this podcast was to inform you, that P2P lending is here to stay and here to grow. And at LenDenClub, we are committed to customer comes first for us, right? And whatever we do is for our lenders like you and borrowers like you, correct? So with this, I'll end this podcast, but stay tuned for more discussions on finance and P2P lending. Thank you so much.